Welcome to Ford Revolutional Forex Institute. This is Kosnatse, the founder and a senior trader of Ford Revolutional Forex Institute. So traders, in this video, I will share the currency pair that I'm paying more attention on, or that I'm focusing on this week. So today, also traders, before we move any further, let's just read the risk disclaimer. Trading foreign exchange and stock markets on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high level of leverage can work against you as well as for you. Lastly, any information or advice contained within this platform is shared for educational purpose only, and it should not be considered as financial or investment advice. So traders, today I will mainly focus on the Nzdchf, or we can call it the New Zealand dollar and Swiss franc. So this is the market time frame traders, and it seems like here we have like the leading diagonal impulsive wave pattern, and there are three main reasons I say this is the leading diagonal impulsive wave pattern. Firstly, it's because wave 1, it seems like wave 1 was the longest wave compared to wave 3 and then wave 5, because in a leading diagonal impulsive wave pattern, when you remember, if you remember, wave 1 must be the longest wave compared to wave 3 and then wave 5. Secondly, wave 5, it seems like it was completed as the shortest wave compared to wave 3 and then wave 5, because in the leading diagonal impulsive wave pattern, wave 5 must be completed as the shortest wave compared to wave 3 and then wave 5. Finally, let's focus on wave 4 now. Wave 4 in any diagonal impulsive wave pattern, it might either be the leading diagonal impulsive wave pattern or the expanding diagonal impulsive wave pattern. But wave 4 does move in the diagonal impulsive wave pattern. It's usually completed beyond the level of wave 1. So you can see here that we have our wave 3 and then wave 4. So our wave 4 was completed beyond the level of wave 1. And then you know that in a regular impulsive wave pattern, wave 4 must never reach the level of wave 1. So those are the main reasons why I say this is the leading diagonal impulsive wave pattern. So now I want us to move to the weekly time frame, and I want us to mainly focus on this leg, on this wave, on the formation of wave 5. So let's go to the weekly time frame. So on the weekly time frame, you can see here that the market completed this wave 4 in a single zigzag, because we have A, B, C. So after the completion of this wave 4, the markets went down from this bearish trend. Okay, so we have this bearish trend going down to form wave 5. So you can also see that I have also drawn this bearish trend line. So this bearish trend line, even though it's the inner trend line, because the main reason it's the inner trend line, it's because it's within this trend line of the leading diagonal. So we have this trend line of the leading diagonal impulsive wave pattern, and then we also have this trend line of the formation of wave 5, okay, within this leading diagonal impulsive, within this trend line of the leading diagonal impulsive wave pattern. So this is the inner trend line. If so, you know that the inner trend line are not that important, but in this case it's different, traders, because the main reason I say this is different is because if you look closely to this trend line, you will see that this trend line, it's the big trend line. Number two, this trend line was actually started at the start of 2021, around January 2021. So you can see that this trend has been valid for almost 3 years, or for more than 3 years. So we can't say this trend line it's not important. So this trend line is very important to keep an eye on, because it has been valid for more than 3 years. So a trend line which has been more than for 3 months, it's became significant. So for here it's different. So here it's even worse, because this trend line, it has been valid for almost 3 years. So it's very important to pay more attention on this trend line. So I want us to focus here down, traders, here. So you can see here that it seems like the price has started to break this trend line, this long-term trend line. So after the markets broke this long-term trend line, it formed something of a pullback. Okay, so I want us to go to a daily time frame where we will mainly focus on this leg. Okay, on this leg. So let's go straight to the formation of wave 1. So you can see here, this is the impulsive movement. So the market moved sharply to the upside, and then it broke the trend line that I shown you. Let me show you again. So it broke this trend line here. Okay, so you can see we have this blue line here which represents that trend line. So the market broke the trend line significantly, and thereafter it's formed this wave 1. So after it formed the wave 1, the market has it's from the pullback. So traders, you always, yeah, I think most of you will remember that I always emphasize the importance of waiting for the pullback after the breakouts. So you can see here that we did have like the breakouts, and then we have like the pullback. So now we have the pullback, and the pullback in most cases actually it's supposed to be the correction. The pullback is the correction. So now you see that we have this correction, with this correction which acted as the pullback, okay, of the breakouts. So now you can see that wave 2 was completed as the triangular pattern of the Nzdchf theory. So after the completion of this wave E, because the market, after the market completed this wave E, it just formed this strong bullish candlestick. So the formation of this strong bullish candlestick was the formation of the morning star reversal candlestick pattern, because the morning star candlestick pattern is supposed to be formed by bearish candlestick and then the doji, and then after that it's supposed to be formed by the bullish candlestick, and the bullish candlestick must be completed at least at 50% of the bearish candlestick. Okay, so you can see that this bullish candlestick was completed far away 50% of this bearish candlestick. So what happened after that, after executed the trade, the markets went up and then it came back. So the markets, when it came back, it formed something. So it's formed, I would say it formed like a pullback of this breakout, because we also have this breakout now, the breakout of the triangular pattern of wave 2. So the breakouts and then the pullback. So for now, the main reason I'm sharing this setup is because there is still opportunity for some people who are interested in the New Zealand dollar and Swiss franc, because this candlestick, it's a very strong bullish candlestick. So you can also, you still have the opportunity to execute a bullish trade here. So when you execute a bullish trade, you will put your stop loss here, but this is my trade stop loss because my first stop loss was here and I just shifted my stop loss to around this area after the market started to form this bullish candlestick. So I want us to, so now let's move to risk management of this trade. So I executed a buy position on the 2nd of April 2024. The entry was around 0.54150. My stop loss was around 0.53730. My take profit was around 0.60029. My risk, I'm only risking like 40 pips, okay? And the reward I'm expecting, if this trade plays out as I expected it, I will gain around 500 pips. And then the risk reward ratio is 1 is to 12.5, and I run it off to 1 is to 13. So now traders, you can see this is a very good risk reward ratio. 1 is to 13 is a very good risk reward ratio. So that is why traders, I always encourage you to follow the price action setups, because they always, most of the time, based on my trading experience, they provide a good risk reward ratio. So now the current trial. So let's discuss the trial. So here we are talking about the trial stop loss. So my first stop loss was here when I was risking like 40 pips, and then now I'm shifting my stop loss to around this area. Okay, let's discuss what happened. So now my stop loss, it's around 0.53910, and then now I'm only risking 20%, sorry, 20 pips. So what does it mean? So I'm sorry. So now what does that mean? It means that I'm no longer risking 40 pips. Now I'm risking 20 pips. And then the reason I'm risking 20 pips now, it's because traders, if you follow me on my Facebook, I always emphasize the importance of cutting your losses very quickly, and then let your winners run. So in this case, the main reason I shifted my stop loss is because after this candlestick, you can see now that the buyers are very powerful. So now I just shifted my stop loss here. So that's just in case if this setup, if it turns out that the markets will go against me. Therefore, I will only lose like 20 pips for now, because now it seems like the market has already started to move in our direction. So I just move my stop loss here. I might just move my stop losses. So now I'm risking about 20 pips, and this was updated on the, no, it wasn't updated on the 7th. It was updated today on the 8th of April 2024. Okay, so the final outcome of the trade, it's pending. The main reason I'm saying it's pending, it's because I haven't closed this trade. This trade is still running. So traders, this is all I can say about this trade, and I will see you next week when I give you an update on the New Zealand dollar and Swiss franc. So traders, thank you for watching. I will see you next week.